Tonight, on Real Globe News Report, UPS, the world's largest package delivery company, is undertaking a massive restructuring. The shipping giant plans to cut 20,000 jobs and shutter 73 buildings by June this year, while its first quarter revenue dipped to $21.5 billion, down 0.7% from a year ago, but still beating analyst expectations. What's behind these dramatic moves? And what does this mean for the future of parcel delivery? Graphics, Q1 revenue chart, EPS comparison. In its Q1 earnings report, UPS revealed consolidated revenue of $21.5 billion, compared with $21.7 billion a year prior, yet above the $21.05 billion Wall Street forecast. Adjusted earnings per share were $1.49, topping estimates of $1.38. Digging deeper, UPS's US domestic segment saw revenue rise 1.4%, buoyed by air cargo growth and higher pricing per package. Meanwhile, international revenue grew 2.7%, driven by volume gains. Yet its supply chain solutions arm suffered a steep 15% decline after divesting Coyote Logistics. UPS's decision is closely tied to its largest customer, Amazon. In January, UPS announced plans to slash Amazon volume by more than 50% by mid-2026, aiming to focus on higher margin business. With e-commerce demand plateauing and Amazon heavily negotiating rates, UPS needs to rebalance its network. CEO Carol Tomé explained on the earnings call, "We anticipate lower volumes from our largest customer. These actions will help us become a more profitable, agile, and differentiated UPS." Graphics, breakdown of cost savings, 3.5B, 400, 600 meters expenses. To achieve $3.5 billion in 2025 cost savings, UPS will eliminate 20,000 positions, about 4% of its 490,000-strong workforce, and close 73 underutilized facilities by the end of June. This move aligns with broader strategies, increased automation, network consolidation, and asset sales. However, these actions come with one-time restructuring charges of roughly $600 million. Tomé emphasized, while the macro environment remains uncertain, these timely actions will make UPS stronger and more nimble. Footage: UPS drivers unloading trucks, Teamsters Union Hall. Sean M. O'Brien, president of the Teamsters Union representing many UPS employees, warned UPS must honor its contract guaranteeing 30,000 union jobs. "If UPS crosses that line, they'll be in for a fight," he said. UPS told Reuters it will follow its collective bargaining agreements, maintaining dialogue with labor leaders as the cuts proceed. Graphics, US-China tariff chart. Package volume trend. Another headwind, US tariffs. Effective May 2nd, the de minimis exemption for low-value Chinese imports ends, and a 145% tariff looms. Tomé warned, Trump's tariffs are causing so much uncertainty. "We haven't seen such trade disruption in a century." Treasury and commerce experts predict these tariffs could reduce parcel volumes from key e-tailers like Shein and Temu, further pressuring carriers. Footage: other carriers, FedEx planes, Amazon vans. UPS isn't alone. FedEx also faces flat volumes, and Amazon's own delivery network keeps growing. To stay competitive, UPS must pivot from volume-driven growth toward profitability, hence the strategic retreat from low-margin, high-volume partners. UPS's move mirrors a broader industry trend. Carriers are deploying dynamic pricing, expanding new services like healthcare logistics, and investing in warehouses closer to end customers. Graphics, UPS stock movement, analyst rating consensus. Despite revenue slipping, UPS beat EPS expectations, sending its stock up around 1% in after-hours trading. Analysts at JP Morgan and Goldman Sachs maintained neutral ratings, but revised price targets slightly downward, citing structural pressure from tariffs and volume headwinds. UPS did not update its full-year revenue forecast of $89 billion and a 10.8% operating margin, signaling caution amid economic uncertainty. Footage: small businesses, rural UPS Dropbox. Local businesses, especially SMEs reliant on affordable parcel rates, may see costs rise as UPS shifts pricing toward profitability. Rural areas with low volume could face reduced service levels. UPS plans to monitor volume changes and may close additional facilities if needed. Closing visuals: UPS sorting facility, workers, CEO event. UPS's bold restructuring, 20,000 jobs cut and a slight Q1 revenue dip, reflects a critical pivot from volume growth to margin focus. As the company navigates Amazon's evolving relationship, tariff shocks and e-commerce shifts, the coming quarters will test its new, leaner model. This has been Real Globe News Report. Subscribe for real-time updates on UPS's journey, e-commerce trends, and global trade developments. Thanks for watching. See you next time.